Hi friends, my name is Krishna Akamalla. Welcome back to my YouTube channel. In our previous video, we discussed about the basis of inventory valuation, right? Um, we discussed about cost or net realizable value, whichever is lower, has to be taken into account for valuation of the inventory, right? This is what we discussed in our previous video. In today's video, we are going to discuss about the recording system. What do you mean by recording system? When we are talking about the inventory, basis, and significance, we also need to understand how this inventory has to be recorded, right? Are there any systems available in recording this inventory? That is something which we are going to discuss in this video. Without wasting much time, let us get into the presentation to understand how the inventory can be recorded. Are there any methods to record this inventory into the books of accounts, right? That is what we are going to discuss. Okay, let us get into the present. Okay guys, how the inventory can be recorded into our books of accounts. There are two systems available to record our inventory into the books of account. Systems, what are those? Periodic inventory system. What is that? Periodic inventory system. And second thing is perpetual inventory system. I still remember when I started my career. That time there was no BPO industry. We used to attend for interviews, uh, manufacturing, right? I still remember I used to get one question from the manufacturing industry. What do you mean by perpetual inventory system? What is the difference between a perpetual inventory system and a periodic inventory system? These are the questions they used to ask in the interview. See, this video is going to be very helpful for those people who are attending these interviews in manufacturing. I'm sure they are going to ask these kind of questions. What do you mean by perpetual inventory system? And what do you mean by periodic inventory system? You should know this. This is not only useful for CA foundation or 11th, 12th, 9th and 10th standard students. This is useful for those people who are attending interviews in corporate sector. So I sincerely request all of you to watch this video till the end. You will definitely get to know what is the periodic inventory system and what is the meaning of perpetual inventory system. It's very important to know, right. So there are two systems available. One is periodic inventory system, other one is perpetual inventory system. Periodic inventory system is basically follow the physical count of physical verification of inventory. This physical verification of inventory, when I was working in my first company, I already took one video. My first company, the Water Base Limited, right? So you can refer that video. I have a little bit I spoke about the inventory system as well in the last part of that video, but it is not fully covered there. So don't get biased with my statement right now. What I'm going to tell you here is we used to take we do the physical verification of inventory on monthly basis. See, is it necessary to take the physical verification on monthly basis? It depends. Suppose if you want to prepare your financial statements, profit and loss account and balance sheet on monthly basis, you should know what is your consumption, what is your closing stock, what is your opening stock, right? So if you want to prepare the profit and loss account and balance sheet on monthly basis, don't have an alternative than taking the physical verification on a monthly basis. If you want to do it on quarterly basis, you have to do the physical verification on quarterly basis. This system is applicable for periodic inventory system. I'm not talking about the perpetual inventory system. I'm talking about the periodic inventory system right now. When I am following periodic inventory system, And if I want to prepare my financial statements on monthly basis, I have to take the physical verification of my inventory on a monthly basis, because I wanted to do the P&L. I wanted to know my profitability and financial position on a monthly basis. Suppose if I want to know my financial position on quarterly basis, I have to do the physical verification on quarterly basis. If I want to do this on half yearly basis, if I want to know the financial position on half yearly basis, obviously I need to do the physical verification half yearly once, right? So physical verification is must in periodic inventory system. What we generally do, suppose last month if I would have done my physical verification, arrived what should be my closing stock. So how do we arrive that closing stock is there? So closing last month closing stock will become opening stock. Opening stock, this you know the opening stock, and you know what are the purchases you made. You know the purchases you made minus you are doing the physical verification of stock on monthly basis or quarterly basis or half yearly basis. So closing inventory you need to put closing inventory. This is closing stock basically, closing stock or closing inventory. So you are taking opening stock which was taken in previous month and carry forward to current month as opening. Plus, you know what are the purchases you made in the current month. You added those purchases and you deducted your closing inventory. How did you arrive this closing inventory? Again, current month you are going to do the physical verification and arrive what should be your closing stock. This is based on the physical verification of current month. And this is the physical verification of previous month. Are you getting my point? Your opening stock is basically the physical verification of previous month close. That has become opening stock. So you have taken the opening stock plus whatever purchases you made in the current month that you added and you deducted your closing inventory. Then what do you get out of this formula? Opening stock plus purchases minus closing stock. What do you get? Get cost of goods. What do you get? Get cost of goods sold. Cost of goods sold is nothing but your consumption for the month. Cost of goods sold is nothing but what is your consumption for the month. One beautiful point is here. You have taken the physical stock and you have taken the purchases and you deducted the closing stock. In this case, suppose what is the guarantee that there is no fraud or wastage of your inventory being considered here? Where is that wastage or fraud of inventory being considered here? Being considered in the consumption. This is the beauty of this point. Your wastage and fraud is part of your cost of goods sold. On what basis I'm saying that your wastage and if at all any fraud is happened or if at all any wastage is happened, where is that being covered here? That has been covered in the cost of goods sold. On what basis I'm saying that your wastage or fraud is being considered in the cost of goods sold? That is something which you ask tomorrow. Anybody can ask you this question. How do you know that wastage and fraud is being part of your closing stock? Simple. Sorry, part of your closing cost of goods sold. What should be your answer? You have taken the opening inventory. Let us assume that your opening inventory is correct and you have taken into purchases, right? And you are simply deducting the closing stock. That means what? Your opening, let us say you have opening stock of 1 lakh and you have 50,000 of purchases. So total 1,50,000 and you have 70,000 closing inventory. That means 80,000 is your cost of goods, cost of sold. That means 80,000. What? This 80,000 we are considering it as the consumption. We are considering this as consumption or cost of goods sold. Correct? In this, it includes actual consumption. It also includes wastage It also includes any fraud. All these things would have been included here. On what basis I'm saying? Because you don't have any record of actual material issued to production. Don't have any record of actual material issued from stores department to your production department. Generally, let me tell you, generally what will happen when we you should know, you should understand the manufacturing concern, how it works. Then you can definitely get to know about this point. Let me explain that in detail to you. See how manufacturing industry works. Let us say this is the production department. Manufacturing, it has stores. It has purchase department or commercial department. There are three departments. These people, what commercial people will do, they buy the raw material based on the production department request, and this material will be sent to stores. So I purchased 1 lakh worth of material and it currently lying in stores department. Then what production department does is it will go to stores department and it will has to give the requisition. We call it as MTN. Each company will follow the different methodology. Production department will go to stores department and they will give MTN. MTN is nothing but material transfer note. They go and request stores department, can you please give me some 50,000 worth of material to me? Then what stores department does? Out of this 1 lakh, 50,000 worth of material they will give it to production. And they will go and give another 20,000 MTN. And they will issue 20,000 worth of material to production department. So based on this MTN, stores department keep issuing that material to production department. Now, production department has 70,000. This 70,000 would have been inputted as raw material to the machinery. And machinery will start producing the 70,000 and it will give the ultimate either finished goods or it will be there in WIP by end of the month. This is what happens in the manufacturing. Now, the question is, if stores department has 1 lakh material and if they issued 70,000 worth of materials, what is the guarantee that total 70,000 is used for production? What is the guarantee that there is no some portion of the 70,000 has been wasted? What is the guarantee that out of the 70,000 some material wouldn't have been thefted? What is the guarantee that out of the 70,000 issued to production department wouldn't have got into spillover? I don't know. Stores department will say, boss, I have given 70,000 worth of material to you, and we consider a total 70,000 as part of our consumption. Getting my point? So the biggest challenge in here, then month end what will happen? Month end we go to stores department, we do the physical verification. When we do the physical verification, how much stock will be there in the stores department? 30,000. Why 30,000? They had 1 lakh, out of which 70,000 they issued to production department, and they are left with only 30,000. So you go to the physical verification and you get this 30,000 worth of stock, and you go to accounts department and say, boss, I have only 30,000 closing stock. Then what will happen? You know the opening stock, plus you add purchases, minus you do the closing inventory, then whatever you get, that 70,000 you are considering as cost of goods sold or consumption. The 70,000 you are considering it as cost of goods sold or consumption. But my question here is, what is the guarantee that the production department, whatever 70,000 worth of material received from the stores department has been consumed? What is the guarantee that out of 70,000, some portion of the material is not wasted? What is the guarantee that 70,000 out of 70,000 worth of material, there is no some fraud happened? There is no spillover happened? Very difficult to identify. But there are some ways. There are some ways. Still, but it is very, you have to do the depth analysis to understand whether there is any wastage happened. I'll give you one simple example how we used to do. to identify any spillover or wastage or fraud. You cannot straight away identify spillover. You cannot straight away identify the fraud. You cannot straight away identify the wastage. But you can keep one small control. But that is not 100% control. But still, I will tell you. We used to calculate input-output ratio. We used to calculate input-output ratio. Very simple. See, every manufacturing unit, when they are manufacturing something, they will have a formula, right? If I want to manufacture one product, there will be a formula for that, right? What proportion the raw material has to be kept to be inputted to the machinery, and what should be the outcome of that input. That formula would have been already decided by any business unit, right? So, for example, if I give 100 kgs of input of raw material, I will get 80 kgs of outcome. This is how the formulas would have been designed. So what we used to do is, we used to do the back calculation. We used to do a back calculation. Okay, in current month, what is my finished product and what is my WIP? We used to take these two and back calculate it, see how much would have been my consumption based on the formula. If it is 80 kgs, what should have been my input? My input should be 100 kgs. If this 100 kgs is not coming out of this, then I can say there is a wastage, or there could be some reason why it is used more than 100 kgs. If I use anything beyond 100 kgs, that means what? There could be some problem in my input. It could be because of any reason. Wastage would have happened, or fraud would have happened, spillover happened, anything would have happened. So what I used to do, I used to do input output ratio calculation to see what is my output. For this output, what should have been my input? What should have been my input? I used to calculate. Then I will get estimated input. And then I will take this estimated input and compare with my cost of goods sold, what I arrived previously. When I compare this, I will get to know, oh my God, my estimated input is not matching with the calculation what I arrived after taking physical verification. That means there is some wastage happening. That means there is some spillover happening. That means there is some fraud might have happened. That is a one small control which we can keep in place. But if you ask me straight question, in this periodic inventory system, it is very difficult to identify the fraud or wastage. Why it is very difficult? Because you are simply taking the closing inventory, and what are you doing? You are simply taking opening inventory, and purchases are being added, and you are simply reducing the closing inventory and arriving the cost of goods sold. But what is the guarantee that the total cost of goods sold is being used for the production? Right? That question will arise. That is where exactly there is a loophole in the system. There is a loophole in the system. So physical verification you can do, and what you have to do here is you have to take opening stock plus you have to take purchases, and you have to minus closing stock, then you get cost of goods sold. This is how periodic inventory system works. How periodic system inventory system works? I will take opening stock. This I would have taken as closing inventory in previous month, and purchases, and you simply, this closing stock is physical stock for the current month, right? So then I will get cost of goods sold. This cost of goods sold is nothing but consumption. But what is the guarantee that this is the total consumption? That question always will be there in this particular system, and you cannot identify or you cannot keep exact control in place to make sure that your consumption is the actual consumption without having any fraud or misappropriation or wastage or spillover. Difficult to identify. So that is the reason periodic inventory system has some. Are you getting my point? Now we will go to perpetual inventory system. I hope you understood this concept, right? Then I will go to perpetual inventory system. How perpetual inventory system works? Very simple. Everything has to be recorded into the system. For example, I have opening stock. I have openings. This will be there in the system. In the sense, in our accounting books, it can be SAP or Oracle or any accounting software you take. So opening stock will be there, and your purchases would have been recorded here. So this is also there. So in this case, what will happen? I'll and minus your cost of goods sold is equal to your closing inventory. That is how we arrive. I'll explain in detail now. For example, let us take the same example. Production department is there, and you have source department, you have purchase department, and you have accounts department. These are the departments in any organization, manufacturing, right? So what purchase department do? They purchased 1 lakh worth of goods, raw material. So in the system, it will show as receipts. The system, it will show as R means receipts. It will show in the system as 1 lakh as receipt. Then this 1 lakh will be given to stores department. It will be there in the stores department against each raw material will have one code. Against this code, this raw material would have been recorded in the system, in the accounting software. So if you go to accounting software today, after recording this, you can see, oh, I have 1 lakh of receipt of raw material. You can see that in the system. Number one. Number two, then production department went to stores and requested for 50,000 worth of material issue. So they have given MTN, material transfer note. So what will happen? Stores department issue 50,000 worth of material to production department. Then what will happen? Here in issues, be shown as 50,000. The system, this MTN will be recorded in the system, in the accounting software. So as soon as it is issued 50,000, it will show closing inventory as 50. It will show closing inventory as 50,000. Then it will become 50,000 for opening inventory. Let me clear this. Next month, what will happen? It will appear as opening inventory 50,000 in the system, and you purchased another 30,000. So it will show as a receipt in the system, and you issued 20,000. So these two will be added, 80,000 minus 20,000. 60,000 will be shown as closing inventory. So how it is happening? Because you are recording every aspect of the transaction into the books of accounts here. You are recording the minute you purchased, that you are recording as a receipt. The minute you issued the material to stores, from stores to production, you are recording that as issue of material. Then whatever 1 lakh minus 50,000, it is system is calculating and showing that as closing inventory 50,000. So here the issue is nothing but your consumption. Your issue is nothing but your consumption, and your cost of inventory is 50,000. Your closing inventory 50,000 is nothing but your closing stock. Here in this case, you don't require to do the physical verification. In this case, you don't require to do physical verification. Why you don't require to do physical verification? Because receipt is recorded, issue is recorded, and balance 1 lakh minus 50,000. 50,000 is your closing stock. You don't require to do physical verification, number one. Number two, any point of time in the month, you don't require to wait for the month end close to month end close to come for physical verification, because there is no need for physical verification. Even during the month, any point of time, if you go to the system and see, you will get to know how much material is being purchased, how much has been issued to stores department, and what is your closing inventory. In system, in your accounting software itself, you will get to know these details then and there. You don't require to wait for month end close to come to identify this. That is called perpetual. That is called perpetual inventory system. In perpetual inventory system, you can go to system and you can see whatever closing material, cost of goods sold, This is your cost of goods sold. 50,000 is issued. So 50,000 will be considered as issued to the production department. It is being considered as your cost of goods sold. And balancing is your closing inventory. So you know what is a receipt, you know what has been issued to production, and you know what is the balancing stock, and balancing stock is nothing but your closing inventory. So here you don't require to do your physical verification. System will give you automatically what is your cost of goods sold and what is your closing stock. But in the previous system, you do not know because that is not being recorded in the system. Your closing inventory and cost of goods sold has dependency on physical verification in the previous system. But in this system, there is no such dependency. Perpetual inventory system will give you a clear cut picture. What is your receipt? What has been issued to production? And what is your balancing stock? That balancing stock is your closing. But there are companies, what they do, even though system is giving your closing inventory, some people at least yearly once or half yearly once, they do conduct the physical verification to match the book stock. They do physical verification and match them with the book stock to make sure that whatever system is showing as a closing inventory is correct or not. They do conduct that. But is it mandatory that you have to do on monthly basis to prepare your profit and loss account and balance sheet? Answer is no. You can prepare your profit and loss account and balance sheet without doing any physical verification in this method because cost of goods sold and closing inventory is available in our system directly because every transaction has been recorded in this system. So you don't require to do. But in previous system, you have to do the physical verification. Why you have to do the physical verification in previous system? Because every transaction has not been recorded in that system. Periodic inventory system, you don't record every transaction, because of which you do the physical verification to arrive your cost of goods. Here in this system, you don't require to do physical verification to get the cost of goods sold and closing inventory. That is the beauty of perpetual inventory. That is the beauty of perpetual inventory. Now, since we understood what is perpetual inventory system, what we need to do, we need to just understand what are the differences between periodic inventory system and perpetual inventory system. Guys, this is very, very important. I'm telling you, you need to be very careful with, to understand the differences between these two. The reason is this will be a very good interview question for those who are attending interviews in manufacturing unit. They will definitely ask these kind of questions. If you don't even know what is your how do you manage the inventory module, then how do you clear the interview? So be careful. So now, what are the differences between periodic inventory system and perpetual inventory system? This system is based on physical verification, as I said. Periodic inventory system, what do? You have to do the physical verification to arrive the closing inventory, number one. And to arrive the cost of goods sold also, you need to do the physical verification. Otherwise, you will not get. But in perpetual inventory system, it is based on the book records. You don't require to do the physical verification. But if you want to cross-check your book stock with your physical verification, you have every right to do that. I'm not stopping you, or nobody is going to stop you. But as far as perpetual inventory system is concerned, you don't require to do the physical verification to arrive the cost of goods or closing inventory. Next point. The system provides information about inventory and cost of goods sold at a particular date. Why at a particular date it will provide? Because you have to do the physical verification, right? If you don't do the physical verification, you will never get to know what is your cost of goods sold and your closing inventory in a periodic system. So why particular date only you will get to know? Because you have to go do the physical verification, arrive the closing stock, and then come back to department and take your opening balance plus purchases minus your closing inventory. Then only you will get to know your cost of goods sold. Closing inventory has a dependency on physical verification, and cost of goods sold is also having dependency on closing inventory, because unless you do the physical verification, you will not get to know. Here it provides continuous information about inventory. Why? Because everything is recorded in this. No, your opening balance is available, purchases are being recorded, issues are being recorded. Issue in the sense material issue. not escalations. Material issues are being recorded, and then at any point of time you go to perpetual inventory system, you get to know what is your closing balance. So that is the difference between these two. Next, the system determines inventory and takes cost of goods sold as residual figure. Obviously, right? What is your residual figure? Once you know the closing inventory, you know the opening stock, you added the purchases, you took the physical stock and you reduced it, then residual figure is your cost of goods. But here in perpetual inventory system, it directly gives you. How it directly gives? Opening stock is there, purchases are recorded there, material issue has been recorded there, and you could see the closing inventory as well. So it is open. It is open book. Perpetual inventory system is an open book. You get to know what is your consumption. You get to know what is your closing inventory. You get to know what is your receipt at any point of time. At any point of time. That is the difference. Next, cost of goods sold includes loss of goods as goods not in inventory are assumed to be sold. Here, cost of goods include loss of goods as well. Where in periodic system? Because you are simply taking the physical stock and removing it, right? So once you remove the physical stock, whatever cost of goods sold you get here in periodic inventory system, that includes, as I said previously, that includes misappropriation, fraud, or wastage. Anything would have been included in cost of goods. But here, the wastage, where do you get? That is included in our closing inventory. That is included in your closing inventory. Because, for example, you have taken 1 lakh stock, 1 lakh opening stock, 50,000 you purchased. So you have 1,50,000. In that, you have issued 60,000. So 90,000 your closing inventory. Do you know whether you have 90,000 inventory there? I'm talking about perpetual inventory system. Do you know that exactly 90,000 inventory is available there in the godown? Did you do the physical verification? Didn't do the physical verification. Because perpetual inventory system, everything is being recorded in the system. So you don't know whether the 60,000, whether the total material has been used by the production or not, whether there is a wastage or not, you don't. In this 90,000, what is the guarantee that there is no wastage? What is the guarantee that in this 90,000 there is no pilferage? What is the guarantee that there is no fraud happened in this 90,000? Why am I asking these questions? Because you have not done the physical verification of. Since you have not done the physical verification of this 90,000, whatever system is showing as closing inventory, you are taking it as granted that I have 90,000 worth of stock at my godown. There could be some wastage wouldn't have been taken into account. There could be some fraud would have happened. Anything would have happened that would have been part of this 90,000. That can be arrived only when you do the physical verification, but which is not possible, which is not happening in perpetual inventory system. Perpetual inventory system will give the total information in the system, and as if you want, you can go and do the physical verification and check this, and the difference you can say wastage or fraud or pilferage or anything you can call after doing some investigation audit, not just like that. So these are the differences, valuable differences you definitely identify here. Next, under this method, inventory control is not possible. Why inventory control is not possible in this? There is no record in the system. There will be a receipt. That's all. Purchases would have been recorded. Opening inventory wouldn't have been recorded in the system. Closing inventory wouldn't have been recorded in the system. You are calculating this cost of goods sold and closing inventory at one particular date. That one particular date can be a month end, or that one particular date can be a quarter end, right? So once in a while you are doing this physical verification and arriving what should be your closing inventory and what should be your cost of goods sold. Because how do you keep a control? But if you come to physical, perpetual inventory system, you can keep a control. Simple. For example, if you want to do the physical verification all of a sudden, you would go and do the physical verification, then you compare this with 90,000. Suppose physical verification is having 80,000. but your book stock is showing 90,000. Compare these two. Then you can go and question your production department, your stores department. Boss, what is this? As per books, it is showing 90,000. When I did the physical verification, I have only 80,000. What happened to remaining 10,000? What have you done with this 10,000? Stores department person has to answer for this 10,000 stock. He is answerable. Whereas in this system, periodic system, this 10,000 would have been included in your cost of goods. He will simply say, boss, that has been consumed. You can't answer that unless you do the input output ratio comparison again, right? So there will be some control, but you have to do the in-depth analysis to understand where exactly this 10,000 has gone in periodic inventory system. Whereas in perpetual inventory system, you can have a better control. Why? Because you know what is your book stock and you did the physical verification, compared these two, identified 10,000 difference. Then you will ask the question, right? What happened to this 10,000, boss? Tell me the answer. That is the reason in perpetual inventory system, the stores department and production department people, they get scared to any fraud. If they do the fraud, if somebody does the physical verification to compare them, they can easily identify what happened to this difference. And they are answerable for the differences. So there are so many loopholes in that aspect as well to cover up, but I'm not going to get into all those details right now. But I just want to let you know, but there is a control here, right? Stores department has to answer for this difference, right? Unless they do some other manipulation to cover this 10,000, it can be identified, right? At least there is some control in this place, right? That is what I'm trying to say. Next one, the system is simple and less expensive. Which one is simple? Periodic system. Why is simple periodic system? Because you don't require to have a costliest system in the place. You don't require to have a costliest system in the place. Just do the physical verification, identify. But it is very easy to say, because since I've done that physical verification on a monthly basis, I know the difficulty of it. It is not an easy job. Every month you have to go to every store. It is possible with small organizations, maybe 100 crores turnover, 200 crores turnover units. You can do. If some organization has thousands of crores turnover, how many godowns you go and do the physical verification? Those people, they cannot get into this periodic system. It is very difficult for them because you cannot do physical work. If you start doing physical work whole month or year, you will be doing physical verification only. Then when are you going to arrive the physical stock? When are you going to arrive the closing stock? When are you going to arrive the cost of goods sold? It is very difficult for small organizations like 100 crores turnover or 200 crores. Because when I started working in my first company, that turnover was 100 crores. We used to do the physical verification. But if it is a big organization, it is very difficult. It will take months together to complete the physical verification, right? So for small organizations, periodic inventory system is simple and it is not that costly because it is manual intervention. People have to go and do the physical verification and compare it and close. Whereas in perpetual inventory system, it is costly because you have to have a sophisticated software in place. A good control, you need to keep a good control in place, right? You have to keep a good accounting software like SAP or Oracle kind of softwares. They are very expensive. Their license cost is huge. So if it is a small organization, is it possible for them to implement SAP? Is it possible for them to implement Oracle? For them, it is very costly. At the size of their turnover, there could be difficult for them. But what you need to understand here is a perpetual inventory system can be maintained, provided if it is a big organization and they are afford to pay for that. Similar way, periodic system reduces closure of business for counting of inventory. This is a very important point. When we are doing the physical verification, the biggest difficulty is one side you will be doing the physical verification, other side they will be issuing the material. You need to go, boss, please wait. I'm doing the physical verification, don't issue any stock. Then they will say, sir, there is a production, sir, happening. The production will get stopped. Then we used to run away and note down whatever stocks is being issued. Not an easy job, huh? Doing physical verification, because one side issue happening, other side you will be taking physical verification, or you need to ask your production department to stop production. If you stop production, that will have impact on your sales, right? So there are some challenges in periodic system, because when you go for a physical verification, you will get to know all these challenges. Because I've seen physically, one side I will be doing physical verification, other side they will be issuing the material. Suppose if I identify the difference, they'll come back, sir, you saw that, right? When you were doing the physical verification, somebody was taking some 5 bags of material. You need to take that also into closing stock. How many such cases you can remember? It is not that easy, right? So there are some challenges. Either you need to stop the production, or you need to struggle to note down all these factors into account while doing the similar way. Inventory can be in perpetual inventory system. Inventory can be determined without affecting the operations. Why? You don't require to do physical verification in perpetual inventory system. Your system will give you the closing balance. Your system will give you the physical, value of the inventory. So you don't require to do any physical verification. So these are the differences. Generally, I'm telling you guys, this is the exact reason why I always tell people, at least this younger generation, whoever is completing their BCom or CA or CA intermediate, ICWR, any course for that matter, at least first few years they need to work in the manufacturing unit. Not a very big manufacturing unit, a moderate manufacturing unit. At least 2 to 3 years, if they could work, they will get to know all these facts. It will be very, very useful for them. They will understand what is periodic inventory system. They will understand what is perpetual inventory system, how the physical verification has to be done. Once the physical verification has been done, how the month end close we provide consumption details to the accounts department to prepare their profit and loss account and balance sheet. All these things you will get to know. It's a beautiful concept, I'm telling you. It's a very, very beautiful concept. One has to experience this, right? I hope I am able to bring in some concept to you, and you like this concept. If you have any questions, please feel free to comment on my video, um, and I will try to answer your question. Okay, thank you so much.